Okay, so this is just a brief summary of all the transactions that we just went through. Transactions 1 through 10, you can see them listed here, and the various impacts that they had on our accounting equation. You can see we've got the fundamental portions of the accounting equation lifted up here, and then you can kind of see the different parts of it. Of the expanded accounting equation. So this is really just kind of a brief summary of what we just went through for those first 10 transactions. Okay, so the next part is going to be part B, and we're going to talk about preparing preliminary financial statements. Right now, notice, please notice, because this is extremely important, because we're going to create something called trial balance sometime in the future. And what it does is it's going to show us that our debits and our credits equal, which will make sense when we get there. But please notice that our assets still equal our liabilities and stockholders' equity. So in the end, even after all those transactions, A equals L plus E is still true. Okay. So let's take a look at a preliminary income statement. It's going to be very simple. We are just doing a single step income statement right here. Essentially, we're just saying we're going to group all our revenues, and we only had 2 expenses, so we're going to group those, and we're going to give you one single measure of income, that being net income. Now, what this means to us is that over the course of this year, so the entire year, remember, for the period, okay, and in this case, they're talking about a month. I'll say year a lot because that's typically what you see, but in this case, they're talking about the month. But for that month, Eagle Robotics, their revenues exceeded any of their expenses, giving them net income. Okay, so that's a preliminary income statement. Very simple, right? Income statement, again, is just your revenues and your expenses. Okay, that's what goes on the income statement. If you're having trouble remembering that, please let me know. It's going to become very important that you remember what goes on what statements, that you understand what goes on what statements. So income statement, how do we find income? Income equals revenue minus expenses, right? So this is what goes on your income statement. Okay, that's how I remember it. So the income statement reports revenues and expenses during a period of time. We just talked about that. We use it to assess a company's profitability. Sometimes you'll also see this referred to as your operations statement, okay, or your statement of operations. It's just showing you the efficiency and the effectiveness of how you operated, okay. Most people will look at it as a way to look at profitability, okay. So remember, revenues minus expenses equals net income. So what do we show on the income statement? Again, revenues, expenses, and net income. Okay, so just remember that very simple formula. Revenue minus expenses equals net income, and that is what you need to put on your income statement. Preliminary balance sheet's a little bigger, a little scarier looking. We dealt a lot more with, if you remember, going through and looking at how did this impact the equation. We dealt a lot more with assets, a lot more with liabilities, some with equity, particularly when it came to retained earnings. And those are all the things that go on your balance sheet, right? So here we can see our assets listed out in order of liquidity from most liquid to least liquid. And we've got accounts payable, deferred revenue, notes payable. Those are all of our liabilities. In this case, we've got 2 current and 1 long-term. These are going to be listed out, typically speaking, in the order that you plan on paying them. Okay, and then we give our total liabilities. We have stockholders' equity. In this case, we only got 2 accounts, common stock and retained earnings. We give a total equity number. You add these 2 together, so the sum of your retained earnings plus liabilities should equal this, your total liabilities and equity. And in the end, this and this have to match, meaning, once again, our assets equal liabilities plus equity, and it's still true. Okay. So the balance sheet, as we talked about, is your assets, liabilities, and stockholders' equity balances. It is shown as of a certain date. It is a snapshot. Remember, it is a picture of a moment in time of your financial position. Okay, that's why sometimes you will see this referred to as a statement of financial position. Okay, so if you see that in Edgar or in appendices in the book, do not be afraid. It simply means a balance sheet because the balance sheet shows you your financial position as of a certain date. Okay, the balance sheet really is just your accounting equation. It's assets equals liabilities plus stockholders' equity. I find it does not hurt us to continuously, to repeatedly write that down. Assets equals liability plus equity. So you know if it's an asset, a liability, or equity, it goes on your balance sheet. Okay. Now we'll take a look at our assets, liabilities, and stockholders' equity balances here. The stockholder equities balance is what's going to commonly be on your statement of stockholders' equity, statement of shareholders' equity, statement of retained earnings, whatever you want to call that. You can see here we've only got the two accounts, common stock and retained earnings. Okay. So if you have any questions about any of that, please feel free to contact me. Again, that should just be a review for you. We have talked about that pretty heavily over the course of chapters 1 and chapter 2. So you shouldn't have too many questions about that, but if you do, feel free to contact me. Starting in this next video, we're going to get to what I consider to be the more difficult portion of this chapter to understand. So if you got questions, now's the time to get a hold of me.